Hi, guys.
Hi,
Hi.
Jen.
Hey, I am coming to you on my cell phone because I'm unable to use my camera on my laptop for whatever reason. So I'm gonna host the meeting or share my screen from my laptop, but talk to you guys on here so you can actually see my face. So I just wanted to let you know that that is how we're gonna work this one out, because for whatever reason, I still cannot get my laptop to see my face. So bear with me, I'm joining the meeting on my laptop now. And then I'm going to go ahead and share my screen. Oh, well, I can see me. Okay, cool. So I'm going to share my screen now. Let's go to our presentation for the day. We're going to be talking about loans and different loan types. I think a lot of you guys are new here. So if you have not done, like your first loan, this is kind of just some background information so that you understand the different types of loans that we have and, the best one that would work for each of your clients and kind of like when to use it and how to make the best of each loan and kind of what each one entails and the process for each. So just bear with me. I am bringing up the presentation. Just a sec, guys, sorry. Okay, so I'm gonna see if I can share it now. Just let me know if I'm doing this right, because I've only done it one time before and we should be good now. Can everybody see?
Yeah.
Okay, great. So here is our presentation. It's loan type overview and what you agents need to know. First, let's talk a little bit about who is Bank of England. So all the time, like, oh, Bank of England, you guys are like across the pond in Britain. No, we're not. We are local. We're actually located in Lake Mary. That's our specific branch. But Bank of England itself was founded in 1898 in England, Arkansas. So think of like Oviedo to Orlando. That's what England, Arkansas is to like Little Rock, Arkansas, which is their biggest city. Are you guys seeing the actual presentation, or are you seeing the like all of the files?
Hi, Jen. I just see the files right now.
You do? Okay, so I'm sharing the wrong thing. So I'm going to stop my share and try this again. Here we go. Are we good now?
Yes, perfect.
Okay, awesome. Sorry for that. Okay, so back to the who is Bank of England. So Little Rock, Arkansas You have England, Arkansas, and that's actually where the bank was first founded. We're licensed in all 50 states. So if you guys do have a buyer that is not here, but you're trying to do a referral deal or something like that, and you still want to refer out an awesome lender, that would be us. And we can actually do the deal in all 50 states. We do have 50 plus branches nationwide. So, we're not a small, shop. We kind of operate like one, but we do have lots of locations. We are FDIC insured and a full service bank. So full service meaning in Little Rock, Arkansas, you can actually walk in and have like a checking or bank account. Obviously, it's only in Little Rock because it's a bank. So, they wouldn't be able to actually pay their mortgage in person at a location. It's a privately held, family-owned bank. It's been with the same family for the last however many years it is, since 1898. So it's never changed hands. We have funded $7+ billion in loan volume in 2020. So again, we may have like 1 or 2 walk-in branches in England, Arkansas, but our actual footprint in the mortgage world is pretty big. I mean, I think that 7 billion in loans is substantial. So if people are like, oh, I've never heard of you, that's okay, because we're definitely present and we're doing a lot of business, especially in 2020. So why BOEs? There's obviously a million places that you can choose from, a million places that you can go. But the reason why you choose BOE is because we have the best appraisal team. And what that means is we've used the same 4 to 5 appraisers in the Central Florida market for the last 10 years. These are people that we know, that we like, that we can call, that we can actually get on the phone. They're not just some random appraiser that you get assigned and you never can talk to them, or kind of, if an appraisal comes in low, you don't have access to them. We're the complete opposite. So that's a huge benefit. We can close purchase loans in 2 to 3 weeks. We do have 2 underwriters that work in-house with us. So we can call them as well. It's not like a chain where you got to go through this person to get to that person. I can call the underwriter directly and see where our file's at and see how we can, get it moving. So that's what allows us to close in 2 to 3 weeks. Now, we pre-approve versus pre-qualify. So in today's market, that's huge, right? You're competing with 6 other offers and you want to make sure that yours stands out from everybody else. Well, how you can definitely do that is by offering a pre-approval, not a pre-qualification. And the difference is pre-approving, we've actually reviewed the bank statements, the pay stubs, the W-2s, the tax returns. So we know exactly what's going on with this file before we say, yes, it's good to go ahead and make your offer. Whereas a pre-qualification, buyer calls the lender, it's like, yeah, I've got a 680 credit score. I got like 10 grand in the bank. I make $2,000 a month. And the lender's like, oh, well, that all adds up to me. Sounds like you can probably, buy a house for this amount. And then they submit a pre-qualification letter. You put that offer in, you win the offer. And a week later, your file's falling apart because sometimes buyers are liars. And, that information may not actually be true. And there was no verification that went into it. So we do not do that. We are going to give you a full pre-approval. We do have down payment assistance options available. If you guys were with me 2 weeks ago, we went over down payment assistance options. We can, go over that again briefly if you guys have any questions about that, because it is, something that does set us apart from others. You might speak to lenders and they're like, oh, we don't offer down payment assistance. It's not even a thing anymore. It's not being offered. I wouldn't waste your time. It's them who don't want to waste their time. It's definitely offered. It works the same way as it does any other loan. And if it's an option for your buyer and your buyer needs it, take advantage of it. Local decision making, that just means, again, that we can get our underwriter on the phone, that we can talk through a file, we can explain anything that needs to be done on a file, and have state our case a lot easier than you can with other banks or lenders where you've got to kind of go through a chain of command. So on today's agenda, we are going to understand the different types of loans and the benefits to the buyers, the stereotypes that listings have about each types of these loans, how to flip the buyer's lender, and structuring the offer to the contract. So let's go over the two different loan types. We have government loans and we have conventional loans. A government loan is going to be an FHA insured loan. It's going to be a USDA guaranteed loan, or it's going to be a VA guaranteed loan. Conventional loans are going to be your conforming loans, Fannie Mae, Freddie Mac, and non-conforming loans, meaning they don't follow the traditional guidelines. Those are like sometimes maybe your self-employed buyers, stated income, things like that. So FHA loans, this is an insurance company. It's not a lender. It charges mortgage insurance regardless of the loan value. So sometimes you have people that want to use an FHA loan and they're putting 20% down. That's great. They're still going to have to pay mortgage insurance on that loan. So this is kind of, the time where we need to educate our buyers and explain to them why that may or may not be beneficial. It does not have a minimum credit score, but lenders do have their own guidelines that they go by. Currently for Bank of England, we require 620. So there are some lenders that you might encounter. They're like, oh, well, we go down to 580. That is their choice to do. But for us, unfortunately, or not unfortunately, we're sticking with the 620. It's a more solid buyer, I think. And that's just our minimum guideline. It does allow for a higher debt to income ratio being how much you are spending on your household income versus your actual household expenses. So we can go slightly higher on those than we can a traditional conventional loan. The appraisal sticks to the property for 4 months. This can be a good thing or a bad thing. Sometimes we can use it as leverage. Sometimes, unfortunately, that might hurt our deal. But either way, when you go FHA, you're stuck with it for 4 months. We only require a 3.5% down payment on an FHA loan. So this is the loan that, if you have a borrower does not have a lot to put down, they can do this loan and get away with the minimum, which is 3.5%. FHA loans do have a maximum loan amount, and these have most recently changed. They went up just a tick. They are meant for first-time home buyers. There is no investment property or second homes on this. So you're not going to have an investor who you're going to offer an FHA loan to, or an out-of-town buyer who's looking for like a summer home. They are not going to qualify for an FHA loan. The program is designed for low to moderate income. And we do use Bank of England's private appraisal panel to get those FHA loans done, which again is a benefit. Sorry, guys, my screen is not changing to the next slide. Okay, so now we're moving on to USDA loans. This is the United States Department of Agriculture. That's what it stands for. And they have geographical restrictions. Most of Orange and Seminole County is not allowed. It's going to be your more rural areas that are targeted. They do have income limitations, and these are based on household. So there might be like 1 or 2 pockets of Orange County that you could find that goes USDA. But for the most part, these are going to be like Osceola, Polk, what's the other one? Perhaps Volusia has a couple, but Volusia is, we're seeing a lot more people going out there now to, it allows up to 100% financing. So that means that the buyer is not actually putting any down payment at all with the USDA loan. So buyers find that super attractive until they find out that, you can only live in these pockets. And sometimes that doesn't work for every buyer. So it is a specific buyer that we're looking for that's going to utilize this type of USDA loan. Again, it is only for primary residences. Minimum credit score for this one is a 640. The max debt to income on this is 41%. So as on FHA, you can push it pretty high. On USDA, we are limited to that 41%. Again, we do use Bank of England's private panel of appraisers for this as well. So VA loans, I love VA loans. I know a lot of people have their, hangups on VA loans, but I think that they're pretty smooth. They're offered by the Department of Veterans Affairs. They're built for veterans and surviving spouses only. So a child of a veteran cannot utilize this type of loan. And that's something I run into a lot. Like, oh, well, my dad's a veteran, so he's going to give me his benefits and I'm going to use the loan. Well, unfortunately, unless your dad's, well, let me back up. They can't use it. So something important for them to know. It does allow for 100% financing. So again, this is a type of loan where they're not putting anything down. It is by far the best loan option available for a qualifying buyer, which means if you are working with a veteran, you're going to want to utilize the VA loan because they're going to get all the max benefits, where versus using an FHA or conventional. There's no mortgage insurance. It has the lowest interest rates, lowest down payment available, which again is 0%. And it allows for a 60% debt to income ratio. So this is super high. This is going to be as high as we go in our debt to income ratios. It is based on residual income, and residual income is the income that is left over after all of your bills are paid. VA assigns appraisals directly. So unfortunately with VA loans, we do not use our private panel of appraisers. We do have to use whoever the VA assigns to us. Conventional loans. So these we know are the ones that everyone knows and loves, and these are the ones that sellers are like, yes, bring me a conventional loan, right? Higher credit scores are needed to go conventional. So compared to FHA where you have a 620 and USDA where you have a 640, you need a 680 or better to get a conventional loan. And even getting a 680 or better does not guarantee that you are automatically going to be able to get a conventional loan. You have to look at all of the other back end stuff too in order to qualify with that lower score. Conventional typically does like 700, 720s, like that's more of, you have higher chances of getting approved with those credit scores, but technically minimum is a 680. The minimum is 3% down for a first-time home buyer. Now, that is only first-time home buyer, and the 3% down, there are still other requirements that they have to meet to get that 3% down. So we don't want to just say, oh, well, you're a first-time home buyer, you are automatically going to qualify for sorry, guys, I had a call coming in, that you're automatically going to qualify for this 3% down. It is actually based on the address and what the median income is for that address. If the buyer falls within that, then they can possibly qualify for the 3%. If they're over that, unfortunately, they're back to the minimum 5%. The average down payment is usually over 20%. I don't see that a lot. You guys might work with buyers who have that option available, the full 20%, but I think in this day and age, most of the time people are going with that minimum 5% that is the standard on a conventional loan. The maximum debt to income ratio is a 45.49%. They can possibly go higher, like push it to that 50% debt to income if they have compensating factors. Those are typically going to be if they have money left over after their down payment and closing costs are paid, if they have a higher credit score, if they have really solid income, things like that. So, we'll kind of assess that situation when we're going through it. And again, we do get to use Bank of England's private panel of appraisers for that type of loan. Conventional loans versus non-conforming loans. Those are going to be your foreign national loans, which unfortunately, guys, we do not offer. These are your bank statement loans for self-employed borrowers who don't claim enough income. So hairstylists, barbers, things like that, who they made money, but they're not showing that they made money. So we get to use their bank statements to actually show the cash flow versus their tax returns that are going to show that, they made very little. These are non-warrantable condos and non-conforming properties, which are mixed use properties. So you have like residential and business operating, in the same unit or 2 units. These are also your jumbo loans. A jumbo loan is any amount that is over 548,000 and change. So that's going to be broken up to 2 different loans. You're going to have a first and a second on a jumbo. And again, all of these do use Bank of England's private panel of appraisers, except for the foreign nationals, because again, we do not offer them. So we're talking a lot about this private panel of appraisers and why it's so important. So let's figure that out now. So appraisals can kill the deal, right? We all know that. If appraisal comes in short, seller's like, that's okay. I've got other people who are willing to pay me over. I'm going to go ahead and pass on your offer, and they put it back on the market or take that backup offer. Buyers don't want to pay more than a home is worth. Who would want to do that? There's probably a maximum amount of cash the buyer can bring to the table as well. So even if they wanted to pay over and were comfortable with it, if cash is limited, there's nothing they can do about it anyway. So let's take a real life example here. The list price is $375,000 and the contract price is $400,000. Buyer's putting 10% down and has a total of $55,000 in cash. Appraisal comes in at $360,000. The loan is based off of $360,000, which means they must bring the difference between the appraisal and the contract price. Buyer switches to 5% down, but still doesn't have enough cash. Buyer needs $40,000 conventional contract versus appraisal and has $18,000, 5% down, $58,000 cash. Listing agent flips the loan over to Bank of England. Well, guess what? Bank of England's private panel appraisal, go ahead, we appraise it, and we come up with $400,000. So now no one is short. The buyer is, has their minimum that they're invested in and what they actually have available. And the seller gets to sell their house for $400,000, which is what they were under contract for. So this is a win for everybody. Seller is the best price, the buyer wins the home. All the, loan terms are wonderful. Agents get to close, you guys get paid. Obviously that's the most important part. Everybody wins in the situation. So something that, you guys may not know is you can always challenge an appraisal, or if you are not satisfied with the appraisal and there's nothing you can do to change it, you can flip a lender and have us do our own appraisal and see if we can get closer to what you come in at on a conventional loan. So really important to know so that you guys know that you have options and that's not, the be all end all once you get that appraisal in. Stereotypes. What is a listing agent thinking? FHA loans. The listing agent sees an FHA loan, they're talking it over with their seller and they're thinking to themselves, well, the buyer's high risk because they have a low credit score and they're not bringing a lot of money. USDA loan. Well, this is going to take 45 days to close. A VA loan. Well, since we have, a private panel, the VA panel of appraisers, are they going to come in short? Conventional loan. This is the highest success rate for closing and closing on time. So what this is really about is trusting the buyer's lender, because at the end of the day, it's up to us to make sure that we can actually hit the value and get it done on time, and that we've actually done our due diligence on the type of buyer that we have. So in today's super competitive market, your buyer may lose just based on the lender. So I don't know if you guys have had a lot of experience with different lending or lenders right now, but if someone sees, I don't want to be mean, talk bad, but Quicken Loans or Rocket Mortgage or something like that, this sometimes can mean that it's very hands off. It's kind of going through like a conveyor belt of lending. So you've got like processing and underwriting, and it's not, no one's like actually in the file hands on. They're really big, right? So you kind of lose your foothold on that. Whereas if you work with a lender like us, who's in office or, local, you kind of have a better opportunity to be able to actually call and talk to somebody and move forward on any issues that are coming up with the loan. So you want to ask these questions. How did you get connected with XYZ lender? I've personally seen mixed results with XYZ lender, and they may not have the best reputation in our market. Is there a family connection or a close personal relationship that you have with this lender? If not, let's try to flip the lender. Sometimes people are like, oh, well, my cousin or my brother or my sister or my aunt, they're my lender. And obviously we don't want to infringe on that, and we don't want to like make it a personal thing. If that's personal, that's who they want to go with. I wouldn't push that issue. But with those other types of lenders, that are no name or not local, we want to definitely push that we have a local panel of appraisers that's going to know the property they're appraising. They're very comfortable with Central Florida. They've done this, a million times. You're going to get the best results using that type of appraiser than you would a nationwide appraiser who's just, they're going to randomly choose somebody, send somebody out there, and it's not something that they're super comfortable with or very familiar with. So when you want to flip the lender, what do you say? I do my personal loans with Bank of England, and it's where I send my personal referrals, family members, and friends. They're a great local lender, and they have a great reputation, which may help our offer get accepted over other offers. So sometimes, a listing agent's going to see Rocket Mortgage or XYZ lender, and they're going to say, I've dealt with them before. It wasn't good. I'd like to, not accept this offer just based on the fact that the lender, it's kind of funky. They may not be able to get it done. And that's why it's really important that you build a relationship with a lender so that you feel really comfortable and saying like, hey, my guy or my girl, we're going to get this done for you and it's going to be great. How to structure your offer to win the sale. Call the listing agent and find out what the seller needs. Quick phone call. Hey, we're going to put in an offer. Let us know what we need to, get the deal done. Is it that the that the seller is looking for the fastest sale? They're trying to get out of the house, so they have somewhere else that they're going that they need to have a sale close in 21 days or less. Is it obviously top dollar that they're looking to get? Things like that. Text if they don't answer. If the listing agent isn't calling or texting you back, don't show the home. It's likely to be under contract or already under contract. They may be so busy and have so many offers that they're fielding that they're not even able to take your call or let you know, what's needed. Ask a listing agent if they're going to use an escalatory clause. Some agents don't like them and may only want highest and best. Best case when you're doing this is to use odd numbers if using the escalatory clause, $600 instead of $500 to increase that loan amount, because everyone else is going to probably do $500 increments, right? So if you can win it by just $100 by saying, I'll go $600 over, well, then that makes all the difference. So that's a good way to, to try and start structuring the deals. Write the offer based on the seller's needs. Again, is it that the seller needs to stay in the home longer, shorter? Seller needs to stay in the home until July 11th, but 60% of the offers have had a 30-day closing time. Well, they need a little bit more than 30 days. And you know that because you called the listing agent and you talked about the offer that you're about to make. So you're offering 40 days instead of, 30. Show as many listings from your brokerage as possible. This is your biggest competitive advantage. Your market seller wants to sell to its own agents. So something that the Lake Nona, market is doing is now we're going to start sharing listings with each other coming soon, so that everybody knows what's going on and what's coming, so we can keep it all in-house. And it's so much nicer to work with a partner, someone that you are in the same brokerage with, has the same values, works the same way, so that you can get the deal done with as little hiccup as possible and make your seller really, really happy. So our advantage, speed. We close 50% faster than the national average. We're local. From application to closing, every step and decision is made within our local branch. Integrity. Our partners and our clients become family. We pride ourselves on providing quick solutions every time. So you guys are important to us. Obviously, you agents are as much as the client as the actual client is. We want to make sure you're happy, that you're succeeding, that you're winning, that your business is growing, that you're winning offers every time. So, integrity goes a lot into that. These are, again, the types of loans that we offer. You have your conventional VA bond, which is the down payment assistance, where we didn't touch on it in this one, but I can email all of you again and go over the types of bond loans that are available. USDA, FHA, jumbo, renovation loans. These are the FHA 203K rehab loans. I believe that they are back, and we are going to start offering them again. We did stop during COVID because you have to have a contractor enter the home. It's a lot more hands-on, but they are back. And we can talk about that in another presentation as well, so you guys can get familiar with what that allows you to do. And then we also offer reverse mortgages. I don't know if you guys are familiar with reverse mortgages, but it's offered for 62 years of age or older. It's all property types, and this creates a cash flow for your buyer. It's a lot more in depth, so I won't talk too much about it, but know that if you are speaking with someone and they say, oh, well, we're looking for a reverse mortgage, we can do it. And that's it. Thank you for bearing with me with all of my technical issues, but we can go ahead and open it up to questions. I know that was a lot of information, especially for you newer folks who have not maybe had your first loan or not familiar with all the different types of loans that are offered. But do you guys have any questions for me?
I have a question.
Yeah.
And I'm new, so excuse if my question comes
No,
out a
you're
little
fine.
ignorant.
Yeah.
Would you mind explaining what consists a panel of appraisers?
Yeah.
Like, what
So
does that mean?
that just means that we have 4 or 5 appraisers that are dedicated to work with us. So when you have a contract that comes in, instead of just calling like, okay, well, we need an appraiser, and we pick some random person to go appraise the home, we actually just have a panel. So we have the 4 people that we're going to go to, and we're going to say, hey, are you available on this day to do this appraisal at this location? And that's our personal appraiser that we're calling. And it's not, a random appraiser, if that makes sense.
Is that why you guys guarantee, well, not a guarantee, but you guys get closer to the listing price because you have a group of like group of individuals working on it?
Right. So that's the goal, right? Is that you want to use a local lender, someone who's familiar with the market. So sometimes, if you use a lender who's not local, they can call a lender an appraiser that covers all of Florida. So he may live in Pensacola, and you're saying, oh, well, we have this house in Orlando. Can you come down and appraise it? He doesn't know Orlando. He's not from here. He doesn't know what the neighborhood is like, or what the market is doing, how we're on trend here in Orlando, because he's not from here. So when we go to our panel of appraisers, they're actually from here, they live here, they understand the market. And that is the goal, and the benefit is that you're, using someone who's familiar and not just this out of state or out of area person. And with that, you should hit a closer value than someone who's not familiar with the market.
Thank you.
Yeah, you're welcome. Anybody else? And again, I know you guys are newer, so there are no bad questions or silly questions or anything like that. You don't know what you don't know. And obviously it's really important to learn the types of loans that are available, so that you sound knowledgeable when you're talking to your buyer, and you kind of already have a direction that you're going to go in for them. You don't have to know all the details. Obviously, it's not not your job, to, just like it's not my job to do a CMA. It's not your job to know anything or the more intricate details about the loan, but kind of an overall. So if you have any questions about the loan types or the process, that there's nothing dumb that you can ask. I know there's some question going on in the chat. Let me see if I can bring it up from my phone. Let's see, chat. Yes, I can email the PowerPoint. I believe that the class is being recorded. Elena can answer that for us, but if not, I can send the presentation out. And anyone who's interested in the down payment assistance, I will go ahead and email you individually. If you just leave your email address in the chat box for me, I'll go ahead and shoot that over to you. Thank you. And anybody else, or should we just go ahead and sign off?
I have a quick question.
Sure.
It might not be related to the types of loans, but and I'm new as well. So I just wanted to ask when I've talked to people in in my neighborhood, and they've asked me about like refinancing the houses, like, and I honestly didn't have a lot of information about it. So I was like, I'm gonna ask and I'm gonna let you know, like, how do you direct this type of clients? Like, what do you tell them when they ask you about these things?
Yeah, that's a good one. So we didn't talk about that in this presentation, but we do refinance as well. So, again, we're a full service bank, so we do mortgages and refinances. In that situation, it depends how close you are with your neighbor or how kind of in depth you want to get. I know sometimes maybe they don't want to say what they owe or why they need to refinance. Like they might not say like, well, we want to take money out because we're in debt, things like that. So in that situation, I would just be as keep it as simple as possible and say, hey, I know a great bank. They can help you with your refinance. Here's their information. And then just let me take it from there. But we do offer refinances, and you should definitely pass that information along and, let me have a chat with the client and see if it's something that's in their best interest.
All right, great. Thank you so much.
You're welcome. No problem. Anyone else? Let's see how many I got left with you guys. Yeah, we're good. Elena, are you on? No, I don't think she is. So I'm going to wrap it up then, guys. If you want me to send you any information about this or this presentation or the down payment assistance, or if you have any other general lending questions and you don't feel comfortable asking here, you can email me. That's what we're here for. We know you guys are new and you're looking for help, and all of the tools and all of the pointers. I myself have been doing mortgages for 3 years this time. I did mortgages back in 2007 before the crash, and I have a license, a real estate license, and was a office manager and transaction coordinator for 10 years for a really big real estate team. So anything that you guys have questions on, if I don't know the answer, I have great resources to get you the answer. But if it's about lending, I definitely have the answer. So I will send all of you my contact information via email so that you have it. And from there, we can correspond and we can get phone numbers together. And then I can go ahead and text you my virtual card so that you can give it to your clients. Like in the case of the refinance, you can just text them my information, my card, and they can call from there. So, but with that, I'm going to go ahead and sign off. And I thank you guys all for your time. And I hope to meet you all in person one day. Just some backstory. I'm out on maternity leave. I have a 9-week-old at home. So I will be coming back to the office, and I hope that you guys attend the events and that I get to actually meet all of you in person soon. So thank you so much for your time, guys.
Thank you.
You're welcome. Bye.